Hello my dear friends, now we are going to discuss test your knowledge questions on refunds chapter number 15. So there are only 10 questions on that, but this refunds chapter is actually a very big chapter. So therefore I am going to give you whatever the required provisions for understanding the answers for these questions also. Don't worry about that. So look into the first question. Is there any time limit for sanctioning of refund under section 54? Yes, there is a time limit. First, what is the refund forms? So refund forms, we have various refund forms here. RFD1 is for application for refund. Okay, RFD1 is application. Application for refund is in RFD1. Then next we have something called as RFD2. RFD2 is acknowledgement, and RFD3 is deficiency memo or notice, anyway you can call. Whenever we filed an application, if that application is not proper, then deficiency memo. Then RFD4 is provisional refund, but this provisional refund is applicable only in case of zero rated supplies, not in any other case. Okay, then RFD5 is payment order. So once the refund is sanctioned, then the payment order will be passed in RFD5. So payment order. Then RFD6 is final refund order. So RFD4 is provisional refund order, whereas RFD6 is final refund order. So these are the various refund forms. Now, once we make application for refund, so within 60 days from the date of receipt of application, so they need to sanction the refund. What is considered as the date of application? In acknowledgement, they will be mentioning the date on which they received the application. That date which is mentioned in the acknowledgement as date of receipt of application, from there within 60 days, they need to grant the refund. Otherwise, what will happen? From 61st day, interest will be payable by the government at the rate of 6% per annum. However, in case of zero rated supplies, there is a concept of provisional refund. So whenever we make an application, we get an acknowledgement. From acknowledgement within 7 days. So 7 days is not from the application, 7 days is from the acknowledgement. 7 days from the date of acknowledgement, we will get, not 7 working days, 7 days, we will get refund. How much refund we will get? 90% of the refund claim we will get. So balance 10% we will get within 60 days from the date of application, 7 days from the date of acknowledgement. What is the time limit within which acknowledgement should be given? Usually 15 days. So from the date we make an application, acknowledgement should be generated within 15 days. Okay, that is this. Then second question number 2. Discuss the provisions relating to refund of the amount of advance tax deposited by a casual taxable person. A casual taxable person is a person who comes from the other state to this state for making supply of goods or services on occasional basis and is not having any physical place of business. These casual taxable persons will get a temporary registration, and that temporary registration, so they need to, during the period they get the temporary registration, they need to deposit the advance tax. So that advance tax deposited will go into the cash ledger. Now they can get the refund of that balance. So once their registration expires, they will get the refund of whatever is the excess balance in the cash ledger through the return itself. No need to make a separate application. So they will be filing one last return. Who is that? CTP. For expiry of registration, one last return will be filed. So in that return, they can claim the refund of balance in the cash ledger, but provided they have filed returns for all the returns they have filed for the period for which they obtained the CTP registration. Say this: the amount of advance tax deposited by CTP shall be refunded, so only when such person in respect of the entire period had remained in force furnished all the returns required under section 39. Yes, a CTP will be filing GSTR 3B, not some other return. GSTR 1 and GSTR 3B return only they will file. And refund of any amount after adjusting the tax, okay, shall be claimed in the last return required to be furnished by them. So they can get the refund of that. Okay, and there are some amendments related to this refund of balance in the cash ledger, that is, So for refund of balance in the cash ledger, the time limit is not applicable. 2 years is the general time limit for making application for refund, that is not applicable. And refund of balance in the cash ledger is subject to the provisions of unjust enrichment, no. So which means no need to prove that. So we have not transferred the burden to the next person. So we will get the refund of balance in the cash ledger. So first, time limit not applicable, and second is, so it is not subject to unjust enrichment. Then these are the two amendments you need to remember related to refund from cash ledger. Third question, in case of refund under export of goods, whether BRC, Bank Realization Certificate, or FIRC, for Foreign Inward Remittance Certificate, is necessary for granting the refund? No, not necessary. Why it is not necessary? First of all, in case of export of services, we can go for refund only after realization of the forex proceeds. But in case of export of goods, we can go for refund, but we need to ensure that we are realizing the forex within the time prescribed under FEMA, which is 9 months from the date of let export order. Okay. So for export of service, you can go for refund only after you get the foreign exchange. That's why BRC and FIRC is a documentary evidence for claiming refund in case of export of services. But in case of export of goods, first you will claim the refund and you need to ensure that you are realizing the profit. So this document is not necessary at the time of claiming the refund. That is this. Then, so that is the answer for this. Okay, in case of export of goods, so BRC, FIRC is not necessary document, but that is required to be submitted in case of export of services. Then question number 4. When is a deficiency memo issued in respect of a refund claim made under section 54? That is, whenever we make an application for refund, so the deficiency memo will be issued if the refund application is having certain deficiencies, and after rectifying the deficiencies we need to make another refund application. Now the second refund application after deficiency memo is only considered as the refund application as mentioned in the acknowledgement, because in acknowledgement, so the date of receipt of refund application mentioned in the acknowledgement is only counted for 60 days refund order. But here, first refund application or the refund application filed after deficiency memo, which will be taken as the date of refund application. The second refund application which is filed after deficiency memo. Okay, that is this. So rule 90 provides for communication in prescribed form, that is RFD 3, and the set sub rule also provides that once a deficiency memo has been issued, the claimant is required to file a fresh refund application after rectification of the deficiencies. In this regard, there is one amendment, that is, so we made an application, they gave a deficiency memo, again we made another application. Now 2 years is over, so is it okay? Yes, because whenever we made the first refund application, so then we got the that is within the time limit, we got deficiency memo, and again we are making revised application. So the day we got the deficiency memo till the time we make another refund application, the time limit is excluded for counting 2 years. So it will be within the relevant time limit, because if the application for refund is made beyond 2 years from the relevant date, that application will be time barred due to that reason. Then number 5, state the exceptions to the principle of unjust enrichment as applicable to the refund claims. So you remember this with a keyword, that is ICAI. You remember ICAI. I for ITC refund. In case of ITC refund, no need to prove unjust enrichment. So generally at the time of making refund application, we need to prove that there is no unjust enrichment. For that, either we can, what is unjust enrichment? That we have not passed on the burden to the next person. For that, if the ITC claim does not exceed 2 lakh rupees in the application, then that can be through a declaration, self-declaration. If the ITC claim exceeds 2 lakhs, that should be through a certificate from a chartered accountant or a cost accountant. Okay, so that's how we need to make the application for refund. Now in this case, there are 5 cases where no need to prove unjust enrichment, means neither declaration nor CACMA certificate is required. What are they? I for ITC, I for ITC refund, and C for refund from the cash ledger. I for ITC refund, C for cash ledger, refund from the cash ledger, and R is refund voucher. So refund voucher, when we receive advance, we give receipt voucher, and that advance is cancelled, we will return, so we will give a refund voucher, that. Then E is export of goods or services, and finally W, that is wrong classification. Wrong classification, that is we paid CGST, SGST instead of IGST, or IGST instead of CGST, SGST. So these are the 5 cases. Okay. So that is refund of tax paid on export of goods or services. So export upon payment of export of goods or service upon payment of IGST. Then second, refund of ITC. Refund of ITC in 2 cases, zero rated supply and inverted tax structure. Then refund of tax provided either wholly or partly for which invoice has not been issued, refund voucher. Or section 77, wrong classification. One more point is not added here, that's an amendment. Refund of balance in the cash ledger. Refund of balance in cash ledger. Refund of balance in cash ledger. So that is another case. Or incidents has not been passed, of course. Then any other notified person. So far not notified. So these are the 5 points that you write, that is sufficient for this. Then question number 6. Kailash Global Private Limited supplies various goods in domestic and international markets. It is engaged in both manufacturing and trading of goods. The company is registered under GST in the state of Karnataka. The company export goods without payment of tax under LUT. So they are going for an option for without payment of tax, export of goods or services under LUT option, which means they will not pay any GST and they will get the refund of unutilized ITC. The company has made the following supplies during a tax period. Export of product A to UK for $10,000, assessable value under customs in Indian rupees. So now export duty is levied. Whenever we are exporting some goods on which we need to pay duty under customs, then we will not get the refund of ITC. So refund of ITC not available. Refund of ITC not available in this case. Why? So because that is one of the restriction, that whenever we export goods and upon payment of customs duty under customs, then we will not get the refund of ITC. Only one option, refund upon payment of IGST option. But clearly it is given that they are going for refund without payment of GST under LUT option. So that's why they will not get any refund in this case. So no refund. Then second, domestic supplies of taxable product B during the period excluding tax at 5%. Inputs used in manufacturing of such goods are taxable at 18%. And this is not notified as a product in respect of which refund of unutilized ITC shall not be allowed under section 54 subsection 3. So that is, this is domestic supplies of product B. So whenever we are making supply of product and the rate of GST on outward supply, what is the rate of GST on outward supply? 5%, whereas the rate of GST on inward supply is 18%. It is known as an inverted tax structure. So the GST rate on outward supply is less than the GST rate on inward supply is known as inverted tax structure. In case of inverted tax structure, so refund of unutilized ITC is available. Okay. And provided it is not a notified product, yes, it is not a notified product. If it is notified product, we will not get notified product for the purpose of non-availability of refund. It is not a notified product, so we will get refund of ITC. Okay. Then in this case, refund is available. Third, supply of goods to EOU. So whenever we are making supplies to EOU, it is deemed exports. In case of deemed exports, either supplier can claim the refund or recipient can claim the refund. But here, see the clue, ITC has been claimed by the recipient. When ITC has been claimed by the recipient, means supplier charges GST. So then supplier will not claim the refund, recipient only will claim the refund. So for supplier, it will be treated as a normal sale. So no refund. No refund. So in case of deemed export, 2 options are there. Being a supplier, I will recover the GST from the recipient and recipient will claim the refund. Or I will not recover the GST from the recipient and I will claim the refund. Okay. So but here, so ITC claimed the recipient means I recovered the GST. So he will go for refund. So I will not get any refund. Then export of exempted supplies of goods. So generally when the supply of goods are exempted, so then ITC not available, but that is exported. So it will become zero rated. When it becomes zero rated, we will get the refund. So here also we will get the refund of ITC. We will get the refund of ITC. So there are 2 cases where we will get the refund of ITC. First is on account of zero rated, second is on account of inverted, or first on inverted, second on zero rated, whatever it may be. Anyway, you can calculate. So how to calculate the refund on account of inverted turnover? So refund with respect to inverted turnover, with respect to inverted turnover. How to compute that refund? First, net ITC we need to take, but when we take net ITC only with respect to inputs, okay, net ITC into, so inverted turnover divided by adjusted total turnover, inverted turnover divided by adjusted total turnover, adjusted total turnover. Now you will get how much is the ITC pertains to inverted turnover minus GST payable on inverted turnover. GST payable on inverted turnover. This is the formula for maximum refund. Okay. Now, if you see the question, the net ITC only on inputs is 3,50,000. So, we will take 3,50,000 into inverted turnover. So, what is the inverted turnover here? That is GST rate less than output less than input. So, 10 lakhs is the inverted turnover. So, we are taking 10 lakhs divided by adjusted total turnover. So, in adjusted total turnover, we will be taking 7 lakhs plus 10 lakhs plus 5 lakhs. Okay. Then, in case of export, value of similarly placed supplier is 5 lakhs. How much should be taken? So, generally when you take export turnover, we need to take 1.5 times of the domestic supplies or value declared, whichever is lower. So, 5 lakhs into 1.5 is what? So, that is 7 lakh 50, but 6 lakhs is declared. So, whichever is lower, 6 lakhs only will be taken. Okay, whichever is lower should be taken. So, denominator will be 28 lakhs minus GST payable on inverted turnover. On 10 lakhs, what is the GST payable? So, on 10 lakhs, the rate of GST will be 5%. So, 5%. So, now if you see the answer, 3,50,000 into 3,50,000 into 10 divided by 28, 1,25,000, and 10 lakhs into 5%, so that is 50,000, okay, minus 50,000, so 75,000 is the refund. So 75,000 is the refund that we got in case of zero rated turnover, that is inverted turnover. So refund of unutilized ITC. So full explanation only, and finally we got the answer 75. Okay, this is in case of refund of unutilized ITC on account of inverted turnover. Now, refund of ITC on account of, this zero rated turnover. So, refund with respect to zero rated, refund with respect to zero rated. How to compute that? Simple. Net ITC into zero rated turnover divided by adjusted total turnover. Okay, simple. And while we take net ITC, we should take both inputs and input services, but not capital goods. Okay, so 3,50,000 plus 1,20,000, 3,50,000 plus 1,20,000, that is 4,70,000, and numerator zero rated. Now, first one is export, but that export is not upon, like that export is not under export without payment of GST. That is export. So, not under bond or LUT. So, which means that will not come in numerator. So, what will come? Zero rated means what? Zero rated, where export is without payment of ITC under bond or LUT, for which we can claim refund here. So, only 6 lakhs. But here we need to compare 1.5 times of 5 lakhs or 6 lakhs, whichever is lower. So, 6 lakhs will be taken, divided by adjusted total turnover. What is that adjusted total turnover? Same, already we computed 28 lakhs. Okay. So, 4,70,000 into 6 divided by 28. Okay. 4,70,000 into 6 divided by 28 should be taken. Okay. So, here you can see. So, but it is calculated as 3,50,000, 1 second, sorry, it is capital goods, sorry. So, this 1,20,000 is capital goods. So, we need to take only inputs and input services. So, I thought that 1,20,000 is input services, that 1,20,000 is capital goods, only with respect to input services. So, inputs and input service 3,50,000 only. So, 3,50,000 into, so 6 divided by 28, that will be 75,000. 75,000 will be taken. So, this is capital goods. Suppose if it is input service, we will take that. Okay, simple, but except capital goods. So, 75,000 is the another refund. So, this is how we need to claim calculate the refund on account of unutilized ITC. Then, seventh one, super engineering works. A registered supplier in Haryana is engaged in supply of taxable goods within the state. Given below are the details of the turnover and applicable GST rates of the final products manufactured by super engineering works, as also the input tax credit availed on inputs. See, remember, in case of refund of unutilized ITC on account of inverted tax structure, so we will get refund only to the extent of ITC with respect to inputs, not input service and capital goods, only inputs. In case of zero rated, inputs and input service, here only inputs data we should take. And in that, if you see product A, product B and product C, 3 products are given. Now, there is one paragraph given below, you see that determine the maximum amount of refund. So, provided that product B is notified as product in which no refund is allowed. So, then product A you take. What is the GST rate on outward supply? 5, which is less than the GST rate on inward supply. So, therefore, it is inverted. Then product B, and we will get the refund. Product B same, it is inverted, but no refund. Why there is no refund? Because product B is notified. Then product C is not inverted, and here also we will not get any refund. Okay. Now what we need to do? So what is the ITC avail? So net ITC 54,000, net ITC 54,000. 54,000 into inverted turnover. What is the inverted turnover? 5 lakhs. So this input is used completely for product A. So which means fully we will take. So inverted turnover divided by total turnover, 5 lakhs divided by 5 lakhs. Okay. Minus GST payable on inverted turnover. What is the GST on inverted turnover? 5 lakhs into 5%. 5 lakhs into 5%, 25,000. So 25,000. So 54,000 minus 25,000, that will be 29,000. Like this you should not do. If you do this way, the answer is wrong, because there is one circular. What does that circular says? That circular says even if one of the input is inverted, while taking net ITC in the formula, you take ITC of all inputs. So what is the ITC of all inputs? 54,000 plus 54,000 plus 11,000, okay, plus 10,000, 54 plus 54 plus 10,000. So that will be 1,18,000. 1,18,000 into, now what is the inverted turnover? Inverted turnover is 5 lakhs, okay, into 5 divided by adjusted total turnover. Total you take 5 lakhs plus 3,50,000 plus 1 lakh, that is 9,50,000. So 5 divided by 9.5. Okay, now you will get the ITC pertaining to inverted turnover minus GST payable on inverted turnover 25,000, that is same. So 1,18,000 into 5 divided by 9.5. So 62,105 something minus 25,000. So 37,105. So 37,105 will be taken as the answer. 37,105. Okay. So what we need to do, there is a CBIC circular which says that net ITC availed during the relevant period needs to be considered irrespective of whether the ITC pertains to inputs eligible for refund of inverted rate supply of goods or not. So that's why we will take the total and then we will do the computation this way. Okay. Then next, question number 8, with reference to section 54 subsection 3, mention the cases where refund of unutilized ITC is allowed. So, 2 cases: zero rated supplies, export of goods or services, supply of goods or services to SEZ. So, that is zero rated supplies, and in that case we will be getting 2 options: export upon payment of IGST or export without payment of IGST under bond or LUT. Then we will get the refund of ITC. That is one case. Second, and refund of ITC on account of inverted rate structure. What is inverted rate structure? The tax rate on outward supply is less than the tax rate on inward supply, but the tax rate should be there. So exempted and nil rated and all will not be treated under inverted. Okay. So that is this. Then question number 9, state few cases where refundable amount shall be paid to the applicant instead of being credited to Consumer Welfare Fund under CGST Act. So actually it is ICRU. ICRU you need to remember, same. So same, like without crediting to Consumer Welfare Fund it will be refunded. Okay. So what is that? ITC refund, refund from the cash ledger, then refund voucher, export of goods or service upon payment of IGST, wrong classification of tax. So those 5 points only already we discussed. Then question number 10, Y Limited exported service valued at US dollar 1 lakh. Supply of service was completed on 15 January. Payment for this service was received on 28 February. After receiving the payment only they will go for refund, and they made a refund claim on 31st March for refund of 6 lakhs. The refund claim was sanctioned on 30th June. What is the amount of refund Y Limited will get in accordance with the law? So what is the relevant date and rate of interest? So they made an application for refund. So therefore, from the refund application within 60 days, they need to get the refund. If they are not getting refund within 60 days, so within 60 days means, so March, April 30 days, May 30 days. So by May 30th, they need to get the refund. Okay. May 30th. By May 30th, they need to get the refund. Otherwise, from May 31st onwards, till the time they are actually getting the money. See, refund order is only sanctioned on 30th June, but we don't know whether the refund is paid on 30th June. That's the reason why in study material, they did not compute the amount of interest. So because the refund order is 30th June, but the refund is paid on 30th June or not, we don't know. So till the time the refund is paid to the applicant, so interest will be computed at the rate of 6% per annum. Okay. So these are the questions, 10 questions that we have on refunds. Thank you.